We have financial accounting and reporting. This is the base for a financial analyst. Every business, if you are a retail banker, you are a corporate banker, or you are in wealth management, you are in private banking, you need to know the strength of your client. And how we see the strength of a client is the first document is financial statements. We need to see his income statement, balance sheet, his cash positions. Being we are into an American atmosphere where American companies are working all over the world, sometimes we are facing the local standards. In some country they don't have IFRS or US gaps, they have their own local standards. Some countries we have IFRS, International Financial Reporting Standards. In US we have US gaps. So we are surrounded by different type of account makers. They have slight differences in their calculation. So if I blindly take the financial statement of Sears or Walmart and I will start comparing it with a French chain of retail, it will not be justified because I am comparing two different things. I should compare the same, like apple with apple, mangoes with mangoes. So we have to be very critical while analyzing that what are their accounting policies, how one company has calculated the depreciation, how the other company is evaluating the stock, what is their revenue recognition policy, what is our revenue recognition policy. These are some important dimensions that we have to go through. None of the course is going to explain you how to be an accountant. Actually, where the work of accountant will finish, the work of financial analyst will start. We have a top-down approach to the financial statements, and the accountant has bottom-up approach because he is starting his working from a journal voucher. It will go in ledger, it will go trial balance, then we will make financial statements. This is upwards trend. We take financials, we take the basic, the final statements, then we go in notes for further clarification and knowing the trends and up and down of the clients. So I cannot rationalize my analysis without understanding accounting, reporting, and with language of the business. Of course, this is not only one. We study economics, that is how this client is inclined with the externalities in terms of micro and macro. For example, if I'm going to fund some real estate company developer, so I have to immediately see that what is the outer market in terms of returns. It is a preferred sector to lend, or should I keep myself waited for certain time. So we have to integrate certain knowledges in terms of the economics, accounting, corporate finance, portfolio, and certain other kind of observations. So today we will discuss the role of financial reporting, and we will see the different aspects of being in financial language, to be aware about financial language. Chapters are pretty simple. One chapter we have how to understand the income statement, how to understand balance sheet, how to understand the cash flow, and one discussion is the general issues which an analyst has to keep in mind when we are going to diagnose a financial performance and health. Like a doctor, doctors diagnose the position of a body. They say fit, weak, or unfit. Same way, financial analysts give an opinion about financial statement in terms of suitability, non-suitability, able to lend, not able to lend. These are our domains. We have to come up with the final decision that how after our several analysis. So role of financial reporting. One term we know is called financial accounting. When we learn how to debit, how to credit, how to put into ledger, journal, this all subsidiary ledgers, trial balance, this is financial accounting. Financial reporting is the upper layer of that. Means, suppose you are a CEO, you are not CFO, you are a CEO. So accounting core issue is the job of a CFO, but accounting broader issues are the job of responsibility of the management. They have to see that broadly they are in alliance with some accounting standards. Are they a going concern? Is they are going to close? What is their ratios in terms of liability, debts, equity? So that comes into a reporting part where you are reporting to shareholders. You are telling them, look, this is our financial strength, this is our financial stability, this is our financial performance, here we stand. So that will be a financial reporting. What we study is reporting. So it says objective of general purpose financial reporting is to provide financial information that is useful to existing and potential investors. So what we do is we try to make a clean, transparent and a self-explained set of document called financial statements that tells everything. For example, what was my performance this year, last year, earning per share, new projects, director reports, everything is explained. So if I want to invest in this company, this document will be helpful for me. So the reporting that we do, the basic ultimate purpose is to aware our stakeholders. Stakeholders, when I use word stakeholders, are all who are interested directly or indirectly in your business. I don't say shareholder. Shareholder are actually part of stakeholders because that's a bigger term. Your supplier, your customer, your lender, your employees, regulators, and certain other research companies like Moody's, Fitchers, they are interested in you, they have interest in you, so they will be all called as stakeholders. So those decisions involve buying, selling, or holding equity and debt instrument, providing or settling loan and other form of the credit. So purely from a finance point of view, this definition has been given that if you want to lend, you want to get some facility, you want to issue bonds, you want to issue security, all basic thing will be covering in your financial statements. Financial statement in a regulated country like US, you cannot expect that a financial statement is not genuine because there is a process, there is an audit, there is a tax, there are some ancillary things that make things more transparent. So naturally, after all these formalities, when a financial statement will be produced, 100% people will trust on these financial statements. But we experience in 1999, 2000, Lehman Brothers filing with Andrew Anderson was the audit firm, but later this guy commits suicide because financial statement was perfectly okay, and after 3 months they filed bankruptcy. So it was altogether a fabricated work. So in the regulated economy, audit reports are considered the base, solid, and that's the base for our analysis. We will do a lot of calculation, dividend growth model, risk calculations, capital asset pricing models, stress testing. We will see that how much is the stress business can take. So all these financial statements are basis for our financial calculations and analysis. Role of financial statement analysis, it says using the information available in financial statements. Now financial statement always include